fast forward to today. So you're at Primegov. There's already quite a bit of capital that's already been put into the company, likely through like the founders and the co-founders. But you're nearing your first institutional round of capital. You're starting to think about a more formal Series A round. So what are the things that you're thinking about now that you'll need to do in the next 12 to 18 months once you raise that round to scale?
Yeah, that's great. So I think the Primegov story is just a little bit unique because we essentially have like a corporate partner who's been helping kind of fund the business. So we're really like on track for a Series A from all of our kind of unit economics in terms of like ARR under contract and bookings growth, size of the team, et cetera. And so kind of a traditional Series A, maybe $5 to $7 million raise on, let's say, 15 to 20, maybe mid 20s.
Yeah.
So it's exciting to think about what we could do kind of for the capital. I mean, for us preparing for it, we're leading our story with the team, right? So same team that's built the market leading company in the space is pretty attractive. So a lot of investors like that. I would say, for other entrepreneurs that are out there, like assembling a team that has high credibility in your market, we really leverage that domain expertise to be good at the work that we're doing to create value for our customers, but the investors really, really like that as well. I think in terms of looking at getting the unit economics right, the CAC to LTV view for us is really top of mind. The win rate is really top of mind. The size on ARR under contract, churn are all things that we're kind of highlighting in the business. One interesting caveat, Jake, you would appreciate this, is in speaking to some investors in GovTech, especially later stage, they actually believe that like $1 spent for 50 cents back on first year contract is like a really good ratio. because they're assuming they're giving you credit for 9 years on the contract in their model. That's
all right.
So they're taking that, times 9. And so now you're like 1 to 4 on actual LTV, but it's over a much longer period of time. So we're at like 1 to 1.3, 1.4. We want to be at 1.5, but turns out that's a really aggressive number. And that's not on the value of the contract, but actually on the first year, right? Okay. And most of our contracts are 3 years long. So if you tripled the number, it would be, it's no quick, but it would be up there into, some of the better numbers, or maybe no traineal.
You're assuming that the governments are going to, because it's in the government space, that the like churn rate's going to be a lot lower. Like the stickiness is way higher, so they're giving you a little bit more credit on those unit economics. Is that what it is?
Yeah, and it's just it's a proven out number across all the companies. At Granicus, we were 0 churn for 8 years, which is just insane, right? Like 0. Like we didn't lose a single dollar in contracted revenue for 8 years, or a logo. Like, I think that's probably a world record. I mean, anyone watching the video that's done better, please send in an email to Sasha, fill her inbox up. She'll forward it on. But and then when we brought the private equity in, or kind of ran our process to sell it 15 years later, it was 99%. So we were losing like 1% a year on a $25 million number. And so that's why the upfront in our model is more expensive, because the sales cycles are really long. And then the back end is also more valuable, I think, because people just don't want to switch. Even when they're out of contract, they'll renew with you at a high probability. So that's good. Now, the opportunity for us is that a lot of the current companies have been bought up by a big kind of PE. They've lost some of their focus. So this domain expertise that we bring plays really strongly to the market buyer. And then they've also, really maximized for EBITDA. So they've been pushing and testing the profit margin with allowable churn, and that frustration that that is being created in the marketplace becomes your competitor's opportunity, right? And so we're talking to a lot of customers who, like, hey, we've kind of had enough of kind of testing that thesis of how long will we stay around, these government contracts, how long will we stay around? But even with that, I would say the churn levels for other vendors in the space are still low compared to traditional markets, other markets, enterprise or whatever. So.
Nice.
Very cool.